Devang, any buzz that you're picking up on MTNL though?
Thanks for having me on the show, Aisha. No, particularly nothing specific that I'm picking up on that and not tracking that as closely.
Tata Communications just came out with numbers, so that stock is in focus as well. Overall, looks like a steady set, so nothing much to complain. But the big boy Reliance will come out with its earnings tomorrow. Jio Financial Services already came out with earnings. So of course, there's very little to say as far as earnings is concerned for Jio per se, Jio Financial per se. But Devang, what's the expectation with respect to RIL, and do you expect any sort of additional announcement? And I'm hinting at the possible unlocking value with the various entities. What are you watching out for?
I think what we have seen is particularly very importantly, most of these companies who were sort of underperforming before the elections have started to also outperform. So be it Reliance, be it banks, be it FMCG companies, be it AgriPlay. Particularly about your question about the earnings of Reliance, I think Jio had a decent set of earnings. While most of these segments that Reliance operates into, be it telecom, be it retail, or be it the traditional oil and gas, or the O2C business, oil to chemical business. I think most of these businesses are doing well. There are empirical evidences of a couple of quarters where you saw one business not doing well, but it was sort of taken care by the other business. But now I think the market is expecting also the listing of maybe something like the telecom business, which we always talk about. I think most of this sort of are triggers for Reliance, because last couple of months, 2 to 3 months, we have seen not so much of outperformance from this type of large cap giants. With FIIs coming back, I think mostly we have seen good flows from FIIs as well. There is good enough flows that is also going to be directed towards the large cap segment, and particularly I think markets have its sight on Reliance for further cues that the market goes up from here or sort of stabilizes. So I think it's an important market leader from here on, and I don't think the numbers would disappoint on any front.
Okay, that's the take coming in on Reliance, which by the way is holding quite strong right now. Let's just bring up the intraday graph as well and show you. Off the day's highs a little bit, but still going strong into its earnings, comfortably around that 3,200, 3,150 odd level. Aditya, would you have a take on Reliance? What's the reading on the charts like?
A very strong looking one, Aisha, without a doubt. And if given a chance to buy Reliance at current levels, I would stick my neck out and put a large chunk of money in Reliance. Even on declines to closer to about 3,100, I wouldn't shy away from adding on to my position. Because if I take a look at slightly longer term time horizon, maybe 3 months from here on, I see significant upside in Reliance, maybe a 3,600 to about 3,800 on the upside is what I'm eyeing on Reliance. On the downside, I don't think so it will move much below 3,000 odd levels. So closer to about the current levels, about 3,100 are good entry points for Reliance, and buy and hold it for at least maybe a quarter or so, and you will see very good returns in Reliance Industries. That's what the chart setup tells me, Aisha.
Gold financiers, that also was in the radar, was on the radar of Jefferies, because they initiated coverage on those counters. Manappuram and Muthoot both, they were more positive on Muthoot versus Manappuram, but right now both of those stocks are doing quite well. Aditya, a quick word as far as the charts are concerned of some of these gold financiers?
No doubt about that. But if I had to pick one, maybe now I will go for a Manappuram Finance, purely going by the chart setup, because that looks like more clear breakout there. And I think stock can test levels of 260 on the upside with a good support on the downside at around 215. Talking of Muthoot Finance, maybe on a decline to about 1,800 to about 1,780 is what I would eye on Muthoot Finance, and then I would go ahead and go long on Muthoot Finance. At current levels, maybe Manappuram looks more attractive to me.
Some of the other names which are in focus is also Eicher. Remember, it was in focus because of the Gorilla 450 launch, which the market now anticipates is going to provide that upgrade option to their current portfolio, that of 350cc Royal Enfield owners as well. Having said that, a start of trade, most of these two-wheeler majors were in the red, but now you can see a pickup with the rest of the market that Eicher is actually holding out. What's Bajaj Auto up to? Because they as well got a decent amount of inquiries for their recent bike as well. So bring up that stock. The CNG bike, which is Freedom 125, which has just been launched as of last week, that got about almost 30,000 inquiries in a week. Now, inquiries, of course, doesn't translate into sales, but that stock as well has lifted off from the session lows regardless. Kunal, on the charts, how are some of these names looking? Eicher, Bajaj?
I think Eicher is something which is looking interesting. I think that stock is now confirming a triple top breakout. 4900, 4950 was a resistance the stock had tested twice in the last 3 months. And the previous attempts, for example, in the first leg of downtrend, the stock had come back towards 4600 as a support for itself, 4450 as a support for itself. In the next leg, the stock made a low of 4600, which means with every move, every retest of the 4900 mark, the stock was making higher lows. And this time around, I think the stock is confirming a breakout above the 4900 level. So this could be at least a 400 to 450 pointer up move for Eicher Motors. So I think even as a breakout play, the stock looks attractive for 5500 as a target.
Fascinated with what's happening in some of these telecom stocks, and these are not service providers. I mean, TTML is not in the fixed line business, but call it coincidence, call it frenzy, call it just a funny move, but just dial TTML, MTNL on mobile. They all are moving up in a synchronized manner. Aditya, it's cement which is turning out to be the sector of the day, and frankly, cement, it's been a late bloomer. It's only last 1 month you've seen action, let's say in India Cement or Mangalam Cement or other cement companies. Is cement looking good for a clean run now?
Absolutely. I think this is one space, where one can still focus on, Neeraj, and I think so, Nikunjan. I think so. This is one space which will make money for investors and traders both. Though there are few pockets which have already moved up within the cement space, names that you pointed out, but there again plays in cement which I think can still be bet on, and can money making opportunity still lies in them. Shree Cement is something which is looking very interesting to me on the chart setup. At current levels, one can initiate a fresh long positions. Looking for a target of 31,500 or 32,000 on the upside. ACC is also looking very interesting to me, even though that the stock has run up quite a bit. I think so. The recent consolidation is a buying opportunity in this stock, and on the upside, 3,000 is something that I'm eyeing on ACC. So both Shree Cement and ACC look very interesting to me, and I think these are two names within the cement pack which should give you decent returns in the coming times.
Okay, so cement clearly is one space which is seeing a lot of action right now. What else is happening in the market? Well, of course, IT is that sector which is in a bull run of sorts. But Devang, what's your view? Is this something that the street should really bank on, the kind of commentary that we are getting, or is it the case that the underperformers are the only place to hide, and that's why we are seeing those big moves on LTI, Mindtree, TCS, Birlasoft of the world?
I think there is reasons. There are reasons beyond this, as you rightly said. One, the laggards have come back with a bang after the election verdict that we saw. There was a lot of talk about sector rotation happening, and that has sort of started to happen a bit. FMCG, consumer, IT, telecom, all this have come back with a bang. And IT particularly, the street had gone with low expectations. I think growing at 2.5% constant currency revenue growth does not sort of give you 5-10% type of moves that we are right now seeing. But this sector has been a laggard. There has been a distinctive improvement in the commentaries of this managements that we have seen. I was just listening to LTI Mindtree also talking about there has been some improvement and sentiment, at least in the BFSI side of the business as well. So I think, yes, most of the stocks had not done anything spectacular in the last 6 months, 1 year. So they are sort of coming out of a multiple period of, or rather extended period of underperformance and hibernation. So my sense is that at reasonable valuation, they used to trade at 35, 40, 45 Ps. The Ps have normally compressed at this level. So I think there is a bit of interest on the street if somebody wants to make that extra 10, 12, 15% type of returns over the next 3-5 years. The stocks probably deserve that type of a 12, 13, 14% type of sort of returns CAGR.
Okay, given that it's big boy Reliance, which is set to report its numbers tomorrow, although post-market hours as always, let me take it across to Samit, find out what the street is penciling in and what his ET Now poll is projecting from Reliance for the first quarter. Samit?
On a sequential basis, we are not expecting a good set of numbers from Reliance Industries. If you see on a consolidated basis, the company's EBITDA is expected to fall by around 6.5%. EBITDA margins are expected to come in lower at around 16.8%, while the net profit drop is expected to be anywhere between 13 to 14 odd percent. Now, the reason behind this drop is the weaker performance coming in from the refining segment and the oil and gas exploration segment. Now, the O2C chemical business EBITDA, if you see, it is expected to drop nearly 20% on a sequential basis, and this is purely on the back of the fact that the Singapore gross refining margins were lower by nearly 52% on a sequential basis. The oil and gas exploration EBITDA, that is expected to drop around 7% on a sequential basis, and this is because of lower production number coming in from KG-D6 and because of sequentially lower prices of gas in the country. When it comes to the retail segment, that is expected to see an increase in its EBITDA number for around 2 odd percent, and this will be purely on the back of store addition and new brand addition that the company has been continuously doing so far. When it comes to Reliance Jio, that is a telecom segment of Reliance Industries, that is expected to report the highest growth on a segment wise. If you see, 2.5% growth is what the street is expecting in, and this will be purely on the back of marginally higher ARPU and the subscriber growth. ARPU number is expected to be higher to around 182.6 rupees per user per month, and this is a kind of this growth that we'll be seeing in ARPU will be for the first time in the last 4 quarters, and this will be purely on the back of higher subscriber, higher data usage, and because of more broadband users coming in on its network. Subscriber number is expected to be around 49 crore. Now, though we are seeing a subscriber growth for the 9th consecutive quarter, the subscriber addition number is lowest in the last 5 quarters. Now, apart from the numbers, the key thing to watch out for would be the management commentary that is coming in on how consumers are behaving post the tariff hike is important to watch. Apart from that, what is their outlook when it comes to the refining and the petrochemical margins, what is their roadmap for the new energy business, and what is their capital expenditure outlay for FY25 would be keenly watched from Reliance Industries earnings.
Okay, point taken. So that's the expectation as far as Reliance is concerned. But clearly on the losing side, Z is one of the parties which is down 9%. UTI AMC has suddenly dropped 6%. And then the entire PSU basket, the HALs, Titagarh Wagon, Railtel Corp of the world, all of these stocks are down. Interestingly, Oil India after that big rally has also seen a bit of a pause. Devang, what's the view on some of these energy companies? Because the likes of ONGC, Oil India, BPCL, HPCL, they had become favorites of the markets. Do you see some sort of pause in that rally?
I think yes, this is a healthy pause. According to me, what we are seeing today, we are seeing a lot of even capital goods businesses, a lot of this oil and gas businesses, some of them being even oil retailers. We are seeing a bit of a correction over there, and so, as I said, the sectors are sort of changing. This looks to be more of a healthy sort of a correction where people are booking profits where they have made huge money and are shifting that capital to somewhere else. Before an important event like budget, I think if markets are going excited and buying even large caps while booking a bit of profits in the mid caps. And again, as I said, this is not a phenomenon that we are seeing since long, but it's happened in the last couple of days only, with even Nasdaq falling, and we are still seeing our markets doing well. I don't read too much into it. This may be a short-term correction aberration. People would like to just go into the budget, taking some profits where they have made huge money, and then again, I think the rally can start if everything goes fine.
SBI, we were discussing in the morning that it was a good Monday, it was not a great Tuesday, and then Friday, Thursday follow-up is there, which is up by 1.5%. I distinctly remember you said that you will wait for one more day of constructive action.
Correct.
Is today's price action constructive enough?
Yes, for SBI it is constructive enough because today's volume is higher than the volume which was seen on Friday when the stock had ebbed off or seen a marginal retracement, I would not say a correction. And today the stock has managed to break past about the 2-day, 3-day swing high. In fact, it's almost at a 1.5 odd month high, just nearing to that June 3rd, June 4th close for itself. So that again is an indicator that the stock is now seeing a follow-through up move. The good part about the stock is that the RSIs and many of the indicators have now come back from a neutral or negative territory to now bullish territory. So that should also aid the move further for the stock. And this actually comes with at a point where the bank nifty which was underperforming, I think should now get a leg up. So I would probably believe that SBI should play a strong as well as a key role for the bank nifty to now come back to the previous size of 53,000.
Just want to take a look at what GMR Airports as well is up to. The June update is a little bit of a negative, given that, month on month the numbers got impacted because of the seasonality factor, monsoon season. So you're obviously not having as many flights. Having said that, they managed to handle about almost 10.6 million passengers across all of their airports, and that's an uptick of roughly about 8% on a year-on-year basis. And the stock has just about consolidated today, down about 0.8%, around 96 mark as we speak right now. Devang, just very quickly before we move forward, GMR Airports or Interglobe Aviation, where is it that you have better valuation comfort, and what is it that you would recommend right now?
I think a little different from this. Of course, GMR Airports is also linked to travel, and Interglobe Aviation is also linked to travel. But a bit of a different theme, a proxy is what we like. We like the hotel businesses per se. Companies like Indian Hotels, companies like EIH. Now, why I say that? Because most of these companies are now becoming are sort of now getting out of the leverage cycle, and the models are also getting quite efficient. That they are not getting to use a lot of capital. They are giving it to certain other companies and just doing what they know the best to run the hotels. Also, the demand for hotel room is rising by around say 12 to 13%, and the supply is rising by 3 to 4% with the advent of spiritual tourism, inbound tourism, religious leisure, as well as this corporate travel. I think this is an industry which will sort of do well with operational efficiencies again coming back, and ROE is on the rise. So my sense is that apart from aviation and airports, which are no doubt not a bad sort of place, but the clear winner can be the hotel industry, which has started to sort of come back with a bang.
Let's get in some BTST trades as well, before we move to the last lap of today's trade. Kunal, what's on your radar?
So Bharti Airtel is the first stock which I would recommend as a buy. The stock crossing levels of 1500 or just about on the verge. So would suggest a buy with 1525 as the target. Stop loss at 1460. And SBI Life is apparently one of the best performing stock from the insurance pack in the last 3-4 weeks. The stock has comfortably made a new high, breaking past over the 1600, even 1650 barrier today. So buy with a target of 1700. Stop loss at 1620.
Right, Aditya, what about your BTST ideas?
So I've got one buy recommendation, Bajaj Finserv, very interesting looking chart setup, Aisha. After long consolidation on good volume, stock has broken out, trading above all its major moving averages. I think it's poised to test levels of 1800. So I would go ahead and buy the stock at current levels. Look for a target of 1800 with the stop loss at 1600. Looks interesting. The second stock is Tata Motors. That is also looking very interesting to me. I think so. A good consolidation breakout is what we are seeing on the stock, and on the verge of a breakout from a channel as well. So preempting a breakout, I think one can go ahead and buy at current levels, look for a target of 1070 on the upside with a stop loss at 1000 on the downside.
Some recommendations coming in, but Devang, any fresh ideas that you have managed to look at, maybe just around the budget, maybe looking at the earnings season, anything that catches your attention?
Stay focused on, as I always talk about, the three C's, and you can add a couple of C's more to that. The C's, one is almost the consumption side of it. I think the consumption side of it will be probably revived post-budget. And of course, you can't take a speculative call on that. But mostly you're seeing the rural side of the economy also starting to do back. Monsoon has so far generally been good. So as I said, one is the consumption, be it discretionary or non-discretionary. The second C belongs to capex and hence capital goods and all, which are going through a phase of hibernation. But I think this will also come back with infra spending. The third C being credit growth, right? So you are seeing a lot of credit growth related companies, be it banks, be it NBFCs, also starting to do well. And add two C's to it, which is corporate profitability and companies with cash flows. So I think these are the themes that we still keep and sticking to basics. I think most of the companies fall under this radar.
27, I mean, I would say just 200 points and then 25,000. अब की बार निफ्टी होगा 25,000 पार. Kunal, it looked like a very different idealistic number at the beginning of the year, like a high tall order, big high watermark.
No, I think we discussed 25,000 on the Nifty.
But that was supposed to be happening
just
but that was
post-election.
supposed
But that
to
was
be
supposed to be
happening
post-elections.
pre-elections.
Post-elections.
We discussed it after the UP election.
2 months
after we discussed in Jan,
Okay.
and the view was that it will touch 25,000 before election. But it's okay if it happens after elections.
Yeah,
it's okay.
2
हो रहा
months.
है. Doesn't matter here and there. But yeah.
No, I think it tells you the kind of, and the best part about the move in last 6-8 months is the sector churn. Underperforming sectors making a comeback, stronger stocks making a next leg of up move for themselves. whether it's the the PSU theme, which has done phenomenally well. Many of the private sector bank stocks have made a comeback. Reliance has made a comeback. That stock, I think, is up 20% plus so far this year on a YTD basis. So I think many large cap names making a comeback. That's adding to the durability.
Okay, Aditya, we'll let you go on that note. Devang, Kunal, both of you, thanks as always for taking the time out and joining in.
If you like this video, then like, share and subscribe to ET Now.